I want to bring in now Solus Alternative Asset Management Managing Director Dan Greenhaus. And Dan, this is your chart. I've seen similar charts, but again, forgetting about fundamentals and everything, it suggests we got a lot more to go in this rally.
Yeah, I think it's just a very surface way of comparing the rally today to the rally in the 90s that we're all talking about anyway. And so you have the Netscape IPO, which came out in August of 95, ChatGPT in Nov 22. You just start the two lines at the same part.
Right.
And what you can see in orange, which is today, you're not really doing as much as that dot-com bubble at the time. That's a little consolation. It's still quite a great rally. It's just not as great as what we saw in the 90s.
But it suggests that it could get greater, though.
And that's the point.
And if you layer that on top of the fact that fundamentals are significantly better than last time around, than the dot-com era.
I think that's true. In the chart on the right, that parabolic move up, I think a lot of people who weren't there, and Charles, no offense, we're old now. We were there.
We were there.
For a lot of the investors in the market, they were not there. The rally from the mid-90s through 1998 was a perfectly normal bull market. It was 99 when things got completely out of control.
Although irrational exuberance was a December 96. Right, so Greenspan was already nervous.
And that's an important point because it reminds viewers that people were talking about a bubble the whole time.
Right.
It's not as if people didn't realize what was happening.
Right, and to me it's also interesting, I started to show in Korea they're selling their insurance policies to get into the market. We're not there yet, so we got a little time to be bubblicious. Speaking of which, Nvidia, they're reporting after the bell. Everyone loves Nvidia. Everyone. This is just in this month, all the reiterations: buy, overweight, outperform. I had to go back. I think I saw one firm with a hold on it somewhere. Does that worry you when everyone loves a stock?
No, I think Nvidia is down the food chain, so to speak. I mean, what I mean by that is it's clearly the most important company, but it's the beneficiary of the spending everyone else is doing. And so when you hear from Meta and Google and Amazon, et cetera, that CapEx is not going to be $600 billion, it's going to be $700 billion, Nvidia is the benefit of that. So no, I don't worry, because to some degree we have the inputs into the expectations.
Right. I mean, we just saw everyone raised, to your point, all these hyperscalers are spending more money, except this time their stocks went up on that news instead of going down. I'm thinking, okay, out a little further, what could be the worst thing that happens for this rally? Maybe the next election. All of a sudden, if you look at reputation for these big-time companies, they've shifted. They were like all light blue. Democrats, favored these companies. Now, overwhelmingly Republican. Bernie Sanders has a bill to sort of stop data centers. There's a lot of fear-mongering about AI. Could that be the thing that hurts it, the next presidential election?
I think this is a very real risk. I'm certainly not alone, and I'm not breaking any news. But for months and months and months, and dare I say quarters, if not years, you had the CEOs of a lot of these companies saying, hey, guess what? You're all going to lose your job, and we're going to charge you more in the form of electricity bills to do it. Right. And I don't think that's a particularly winning political or business message.
Right.
And so, to some degree, yes, this is an enormous story that has yet to fully play out.
All right, it's May. There's the old sell in May and go away thing, which, it's not necessarily something people would do. But May is a little bit different, the May-October move, when it's an election year, all right? And you can see all the red dots here. Are you concerned that maybe, or are we just due for some kind of a pullback, and would it be dramatic?
At first blush, there's 2 points to make. The first of which is, for viewers, there's not a single hedge fund manager who executes anything resembling an investment strategy according to this data. That said, it might end up being true again. You have, at least a couple days ago, a fairly overbought market. You had interest rates backing up. Continued worries about oil prices remaining high for a long time, gas prices at $4.55. We're probably due for a bit of a correction and a give back here, just irrespective of what Nvidia does, in which case I don't know if we're going to be down 21% or 5.06%, but we might be down a little bit from the tops.
Real quick, would you like to see, or should we start to see this rally brought down a little bit, just to make it feel healthier?
Yeah, you would like to see that. I think you've seen it rally broaden out to some degree within the tech complex. We've seen a couple of names in the last couple of months that hadn't rallied, really micro or small cap semiconductor names. They've started to play catch up. So the tech trade is broadening out a little bit. You would certainly want to see it. I know you discussed in the last segment how many names are outperforming the index or still down 20%. You'd love to see that get corrected.
Great stuff, Dan. Really appreciate it, my man.
Thank you, sir.